Hey all, my name is Paul Borowski and I am the owner of Quality Business Plan, and I'm here to bring you all our business plan writers tip number 77, which is financial ratios. Percentages never look so good. And what I mean by that is when you're writing your business plan, make sure to include a financial ratio section within your plan. And where I like to put it is going to be right underneath the break-even analysis. Then I'll go with the payback period, and finally I'll go ahead and I'll add in my financial ratios. The financial ratios that I'd like to touch on are going to be the return on equity, return on assets, current ratio, and the profit margin. And also, when I go ahead and do my ratios, I'll also put in the present value of the expected cash flows and the internal rate of return as well. Also, when I'm doing these ratios, I'm also going to go ahead and project the ratios for the next 5 years. And the reason that I structure it like this is because the return on equity is going to be able to tell the investors if they invest in this company, this is going to be their return that they should be expecting. So for this example right here, the first year they should return 78.5%, and then as it goes on, the return on equity is going to start to diminish. The current ratio, I like to include that just because the current ratio is an excellent gauge to show that the company is going to be liquid. It's going to have enough monies to pay their current liabilities within the next 12 months with their current assets. And of course, the wonderful profit margin, that is definitely going to be one of the ratios you want to cover. And the formula for the profit margin is just net income divided by sales. And this just shows you, what is the percent of profits as compared to sales. And most investors, they like to see this line item right here increasing. And in this particular example, it does. And then the net present value, all that is that's the value of the future cash flows. And that just, some people like to call that a really rough estimation or really rough value of the company. However, this does not include your assets, and it does not deduct the debts to the company. So just keep that in mind. This is just a really rough value. However, the financial ratios are going to be able to support and help the reader of your document better understand your financial statements. So hopefully this information is helpful. And if you all have some needs for raising some funds, then check out one of my books online on Amazon. It's the Complete Small Business Guide to Raising Funds in 2019. Also, if y'all need some help starting a business, I do have a book out on that, which is Starting a Business is Like Playing a Video Game. Here are the level cheats. And if y'all need, if y'all need some help writing a business plan, here's my number, and please just give me a shout. Thank you.